Are you working 50 to 60 hours a week, maybe even more during your busy season? You're juggling dozens of clients, but your revenue just hasn't moved the needle, especially you're not where you think you ought to be, considering how long you've had your firm. Well, that is what I call the upper limit challenge. And I'm just going to say it is not sustainable. When your time's maxed out, so is your earning potential. I'm Loren Fogelman with Business Success Solution. And now, what if instead of working with all those clients, all those hours for revenue that isn't very profitable, you were able to cut back to maybe 15 clients and your revenue exceeded $400,000. And the other part is that you're not working as many hours. You're down to a 40-hour work week, maybe even less. And when you're working in this way, you feel energized, it feels sustainable. You have the capacity to grow a scalable advisory model. And that is what we're going to be looking at today, is the difference between the traditional compliance firm and having one that focuses on the advisory services. So if you've already moved past hourly billing and you're looking to build a firm that's more profitable, you want one that has better quality clients, it's less demanding, you don't have to sacrifice your personal life in order to meet your revenue needs, then the next step is that advisory model. So we want to start out by rethinking growth. What does it mean? Well, you might have thought that it meant in order to earn more, you have to have more clients, you have to be working more hours, you have to grow your team, and also grow your overhead. But what if that really isn't the guarantee to having higher profits or better quality of life? In fact, think about what are the sacrifices you've already made in order to get your firm to where it is. So when we're able to revise the business model to where you're now working with better clients, higher quality, you're able to deliver results, you're able to give them the insights they really crave to be able to make better business decisions, and they can see the value of moving forward with you because you're now working in an advisory capacity, then you don't need to hustle. No more hustle. You can get rid of that. And instead, you're looking to evolve your business model in a way that benefits your clients and also benefits you as well as your team. It's a win-win-win. So this is an idea of what the evolution looks like. In a traditional model, you might be working with more than 50 clients. Your engagements are maybe on average around $4,000 a year. You possibly bring in $200,000, $300,000 annually. So not bad, but it's a lot of volume you need to be able to meet your revenue needs. And your margins, maybe they're at 30%. So you find that in order to do this, you are at capacity and your time is stretched really, really thin. Now, if you look at a scaled advisory model, it flips the equation. Basically, you're working maybe with 12, 20 clients. And also, each engagement, instead of being $4,000 annually, is now $15,000 to $30,000 annually. So we increased the lifetime value of a client. And with that, you're able to now bring in about $350,000, maybe even $500,000, if not more, in revenues. So your profit margins skyrocket to 60 to 70%. We flipped the equation, like I said. And the other part is you have more control over your client, your time. You have better boundaries with your clients. You don't need to be responding to them after hours any longer. And it allows you to focus on your highest value, which is strategy and helping your clients implement the data and the financials so that they get better results from engaging with your firm. So this isn't just about the money. I want to let you know that. The money is important, but it's also about looking at your time, your energy, and you taking charge of your firm instead of your firm taking charge of you. So it's not about working more. You don't have the volume model. You're now having the client relationship model. It's definitely more strategic. And this came from really wanted to share this with you came from me talking with Diane Daly, who's a CPA, and her firm specializes in construction accounting. Now, she has been undercharging for years, and she did some additional work without compensation. She was giving away some of her highest level insights to her clients because she didn't know how to charge for it. And as a result, there was some cash flow issues. So things were always tight, low margin. And the turning point for her came during a trip where she realized it wasn't sustainable. She couldn't keep on going this way. She was burning out, doing a lot of work for too little money. And we worked together on raising her rates and shifting the engagements that she had with her clients. As a result of this, her firm increased revenue with $75,000 within weeks. This wasn't a long, drawn-out process. Once again, within weeks, she brought an additional $75,000 in revenue. And she's now on track to add about an additional $125,000 to $140,000 annually to her revenue. So that is something to think about. And when we did this, because she followed a proven approach, gave her all the templates, the scripts, everything, not one client pushed back. Every single one of them said yes to moving in this new direction with her. And as a result of that, Diane now has clear boundaries. She's getting prepaid for her services instead of having to track time and invoice. And also, she's enjoying her work again. But the other thing that she did, which was so important, is that she always had this dream of taking a Viking River cruise. And now she was able to go ahead and the cruise is booked and it was entirely paid for by her business. So that is something that is possible for you too. And how do you know if your firm is ready for this kind of growth? Well, you want to focus on two different metrics. You want to look at the average revenue per client. That's the first one. And the other one is your delivery margin. So what's your profit margin per client? And how many clients are you actually subsidizing? That they're actually in the red because they have had increased workload from them. The scope's expanded, but the fees have remained unchanged. So once again, you want to look at two metrics. You want to look at average revenue per client and also your delivery margins, the profit margin. So those two numbers, they're going to give you some insights as to where you're leaving money on the table. There are definitely money leaks in your firm, and also where your opportunities lie for potential growth without adding to your workload. And I want to emphasize, scaling is not working with everybody. It's about being strategic on who you work with and the distinct problem that you solve for them. Now, Diane, she's always worked with construction clients right from the get-go. But by changing the way that she's talking with them, from the initial consultations or with her current clients of how she's moving forward with them, they stopped asking about how much. And they started asking, how do we get started? It changed everything for her. It was an eye-opener. And I just want to say, by making this shift, it's going to have your clients perceive higher value from your firm services. And as a result, that higher perceived value supports charging higher fees. So once you refine your positioning, then your pricing evolves as well. The other part that Diane started doing is that she no longer did an initial review for free during that initial consultation. She now did a paid diagnostic review where she got paid up front, and that was a way to filter out those price-sensitive, potentially headache clients before they even started moving forward and engaging her services. So this was a way to screen so that she was moving forward with clients who were a right fit for her firm. And once again, that lowers the stress levels for your team as well as for yourself. And since you're working with better clients, they are more profitable than the demanding ones who want a lot of extras but want to pay as little as possible. So I just want to say these shifts go to value-based pricing as opposed to charging for your time or a fixed fee based on time. You're now charging for results, not the hours. And as a result of that, you can start to bring in larger engagements and there is no pushback. This was true for Diane also because they understood. They saw the return on the investment. They saw moving forward with her as an investment, not a cost or a necessary evil. So you don't need more people. You don't need a larger team. What you want to have is the right structure. And what you will do as you move in this direction with the scalable advisory services is also, like Diane, train your team to focus on outcomes, managing client expectations, and also no longer have to chase new clients. So it comes from being able to now work with less clients, but you have a deeper relationship with each one of them. So once again, this is where you're working with high quality clients. You're not taking on everybody that says yes to your fees. You're being more strategic. And part of what she did, and you would do also in this perspective of moving the advisory services, is that you're going to have probably more check-ins with your clients, and you're going to be able to also look at how to be able to support them better. But when additional work or requests come in, there's a structure in place now. There's boundaries. There's a specific process for dealing with out-of-scope requests and reviews as the workload expands. As a result of doing this, not only are you able to work more closely with your clients, give them higher levels of services, but it also strengthens client loyalty while boosting your revenue. So I just want to say this is an approach. As generous as you are, as client-centered, you love all your clients, you don't want to disappoint anybody, you think that all your clients are price-sensitive. True for Diane also. You can go ahead and be more proactive as opposed to reactive. It reduces stress, it gives you your time back, it raises your quality of life, as well as improving the quality of work that your team does too. And as a result of that, it saves your time, it takes care of your energy, you're able to take better care of yourself. So what I want you to look at is your last 12 months of revenue and divide that by the number of clients. That's your average revenue per client. It gives you some insights. And then ask yourself, how much of that is actually profit? Is it below 30%? Is it above, maybe closer to 70%? So you want to be able to look at your annual revenues divided by how many clients you have and figure out how much of that is actually profit. Because those two numbers, the average revenue per client and delivery margin, will guide your next move. So I want to know what you took away from this, any comments, where you need additional information. And if this is something you're ready to do, you're tired of thinking about it, you're ready to have that scalable firm working with a higher quality client, increasing revenues without adding to your workload, then reach out. Let's have a conversation during a complimentary Path to Profit strategy session by going to businesssuccesssolution.com/let's talk to get started. And during that time, we'll look at your current model, we'll map out a plan so you're more profitable and you have a less demanding firm because you're engaging higher quality clients. Anyway, thank you so much. I look forward to further conversations. I'm Loren Fogelman with Business Success Solution, showing accounting firm owners how to be able to double their revenue working half the time.